Hey everyone, this is Finding Value, and I love reading comments. I got a comment from Nate asking, is there a way that we can play the differences in gold miners versus silver miners at a top or a peak of what's coming up? And I'm looking at prices. I've got the prices pulled up. These are just gold and silver prices. Gold's the blue line, silver's the orange line. And I wanted to show how narrow of a window we have to really sell. So I pulled up a couple of things. So in terms of price of the metal, silver really shot up in April of 2011, and then the next, if I can even move it, it shot down very quickly. We're talking like it was only up there for less than a month. So price-wise, silver makes these gigantic peaks. It shoots way high, and it's very short-lived. Gold bounces around at a top for a little while. Gold bounced around the top in the 80s high. Silver was like, I'm out of here, peace. It's just one big move. And same with gold. It peaked a little bit in the 2011, 2012 for some time, for some months. Silver, it peaked and got the heck out of there. So we could actually see silver as a indicator for a sell for gold, if that makes sense. So silver is going to pull back faster, and then gold will eventually follow, it looks like. And usually at these market tops, you're seeing a very low gold to silver ratio. So silver's been outperforming gold. You're going to see a low gold to silver ratio, and you're going to have to swap your metals quick from silver into gold or silver into palladium, because usually palladium's the oddball. So that's kind of what we're looking for in a ratio investing world at the peak. Now I pulled up a couple of miners. And I pulled up EXK, but the gains on EXK are so ridiculous. I had to pull up another company that is as ridiculous, or at least somewhat close. So I pulled up Yamana Gold and EXK. I own EXK in my portfolio. I own AG. I own a lot of producers that I haven't shared yet. I shared my junior mining company, smaller speculative explorer company portfolio. But here's two that I'd like to show. And it was August of 2011 that we peaked. And if you look at August of 2011, when we roll through here, it was jumping around. So it looked like the price of silver moved first, and then the mining companies moved. So we want to stay on top of the gold to silver ratio to see how that's moving, because we're going to see silver fall first. Gold's going to kind of hang up there, and then all the mining and gold companies will follow silver back down. And it's going to be very short-lived. Timing this top is going to be very difficult. Obviously, we're all going to be together on this. So I'm not perfect, and I'm going to be trying to time the top, because I'm going to be selling these mining companies just like everyone else. So it looked like AUY stayed higher longer, which means you had a longer window. The gold companies had a longer window to sell, and the silver companies, they still had a window to sell after, but they dropped pretty dramatically. We had a drop, kind of this one little back test, and then boom, it's done. And it did it pretty radically. So from a peak of September 2nd, 2011 to we got about a 3 or 4 month window where it kind of broke out of that chart pattern. And usually it likes to back test and never I don't know, I can't tell if it back tested that chart pattern. But we had a declining wedge that broke on the bottom side, and that would be our sell signal for me. I'd be like, let's get rid of a large portion of my holdings that right then and there. Because if silver's taken and we see this big chart pattern break, I would be a seller right there. Gold, on the other hand, AUY, Yamana Gold, looked like we had a longer window, and it stayed up till November 23rd, 2012, because gold was bouncing around longer past silver's drop. So we had a longer window to sell gold, and then that fell out too. at least compared to these two companies. And I think they're all pretty similar because I used to look at a lot of these companies in the past. So gold companies, it looks like they have a little bit longer window, a little more cushion there because gold has a bigger cushion of its price. Silver, we got to be on top of it. And we got to look at the ratio because when that ratio spikes, you got to lock in those gains. You got to go to your dealer if you've got physical precious metals. If you're looking to play the ratio and to swap the metals back and forth, to swap those metals. So let's stay on top of this. I'll dig a little deeper. Maybe I can find a little more information coming up, because all of this information is invaluable to us to be thinking about an exit strategy, even though we really haven't hit this big bull market. And my strategy now is you got to get the companies you like. Get the ones that you like today, fill your portfolio with the ones that you want, and we're going to ride them all the way up and try time in the top as best we can. Do not trade in and out of these companies. They move far too fast. We cannot technically trade them on this way up. This is buy and hold strategy all the way. Do not try to get a 25% profit, sell out, and then have it jump 25% in one day. It's too tough to time, in my opinion. I am playing it as a buy and hold, look for an exit when it becomes overvalued from a ratio. And silver has that short window. This is Finding Value. Appreciate the comments. Continue to comment. I love them. And I hope you have a nice day. Thank you.